I'm 680 News senior business editor Mike Eppel. Well, this was another day you'd like to forget on the financial markets. Big selling pressure pretty much worldwide on a whole host of factors, leading to a Tuesday tumble for the TSX and the Wall Street benchmarks. Started overnight in Asia, where the markets sold off on concerns about China's economic growth performance. Through the Eurozone, you've got the European Union rejecting Italy's budget proposal. They want to see more debt reductions there. There's worries about Brexit, the diplomatic tensions brewing between the U.S. and Saudi Arabia. And then you've got corporate America, maybe at peak earnings. The U.S. earnings updates this year have been very strong, spurred on by tax cuts to start the year. But now some are worried that things might be slowing down just a little bit going into 2019. One of those companies is Caterpillar. This is the world's largest maker of heavy equipment for construction, among other things. And they're blaming the Trump tariffs on steel for raising the costs of the raw materials that go into building earth-moving equipment. And Caterpillar had its best quarter ever in the third quarter for earnings, but the stock was down at one point today by as much as 9%, again on the forward guidance. Meantime, Mickey D's continues to roll in the cash as it is seeing strong sales growth in international markets. Its U.S. marketplace has slowed down a little bit, but it is seeing more delivery of McDonald's food through the Uber Eats delivery program. But on international markets, where it gets two-thirds of its revenue, it saw sales growth of more than 4%. Shares of McDonald's today a winner in an otherwise washout day for Wall Street. Stock of McDonald's up by more than 4%. Well, after the initial enthusiasm related to the deal between Canada, Mexico, and the U.S. on trade, that revised NAFTA agreement, the USMCA trade deal, well, on sober second thought, after a few weeks, we've got a new indication that more Canadians are less than pleased with the outcome. 45%, according to an Angus Reid survey, think that the new trade accord is not as good as NAFTA was for Canada. Just a third of all Canadians surveyed think it's a better deal under USMCA, and it also comes into the political spectrum on which way you're leaning, which way you support the trade deal, and whether or not we gave up too much at the bargaining table. The province with the most negative response to the new deal is in Quebec, where about 50% of the dairy industry is located. I think we gave up too much specific U.S. access to the dairy and poultry industries. And ahead of tomorrow's expected interest rate increase at the Bank of Canada, more Canadians are worried about rising debt loads and rising interest rates. An MNP survey indicates that a third of those asked are worried that as their debts go up and interest rates climb, they could be facing a bankruptcy scenario in the future. About 52% are more concerned just about the ability to repay debt, because as interest rates climb, and that affects variable rate mortgages and other borrowing costs. From the 680 newsroom, I'm Mike Eppel for City News.